All right. So today is psychology of trading, like I said. Mental capacity, one of the biggest problems people have. If you guys aren't in the right frame of mind, it's going to affect your trading. Okay, it's going to affect your ability to read the charts. It's going to affect your ability staring at the P&L. It's going to affect your ability on many levels. This is probably more important than being able to read charts, because I can't control your mental state and psychology. I can help you read charts. I can give you price points all day, but I can't control if you're stressing out about a position you're in. Okay. If it's because it's red, if it's because it's not moving fast enough, if it's because you have too much size, right? These are things I could talk you through it through DMs and stuff like that, but it's not something clear cut where I could say at this price level do this or at this price level do that. Some other common problems we have is red trades. Some people automatically with overnights, you have to realize if you're in a swing or if you're taking an overnight, you could wake up to red. If that screws up your whole day, do not take overnights and swings. You have to be able to brush off a trade being red for a little while. I'm guessing today today was pretty directional, so it's not the greatest example, but a lot of trades start off red and turn into green. Look at win. Okay, most of us were out of win because we got stopped out. Some people missed the stop out because they either weren't on live or didn't see the alert, but they were majorly red. They came in today and they got paid 200 to 300, I think 200%, over 200% on the trade, maybe 300%. So you got to be able to walk into a red trade, walk in, wake up in the morning and see red on your screen. You're not always going to wake up on the right direction if you're overnighting things. Don't know if it's really mental capacity, but it kind of feeds into the psychology. If you're over trading and flip-flopping between 10, 20 different trades, I mean, you shouldn't be. I'm only given 2 to 3 to 4 alerts a day. But I know there's other alerts and you guys are allowed to be in other things. And I enjoy guiding you guys in trades you find. And sometimes I even join you guys. Probably more times than you know, I'll join you guys. But if you're over trading, there's 2 things that are happening. Number one, it's taking up mental capacity. I find managing 3 to 4 day trades is the most. I usually go 2 to 3. If you're flipping in and out of trades, and I know some of you guys are doing this, just based off of talking to you guys and some of the questions I get through the day, not only are you over trading, but you're using up mental capacity on wasted trades. Okay. Some of it's being able to identify chop. So if you're so worried about monitoring 10 trades and you can't realize what's what in front of you, usually over trading is the issue. And I classify that under the psychology part. And the other issue is FOMO. Look, we had it today, guys, right? We had it today. Some guys slept late, overslept, some of my West Coast friends, and they walked in and we were already selling things at 100%, 200%, whatever it was, right? It was a big down day. You saw the market going down. You wanted to get into a trade. Well, we got into UPS. We basically stopped ourselves out of UPS, but we got in for a reason. It's not like we're not forcing a trade, right? We don't want to follow FOMO. I'm just trying to bring it up for you guys. Did it work out? No. But I think it was a decent entry for them when they got in. Same entry that we got in, right? The guys that came in on the regular point. So we got in somewhere on the break. We'd have to look at our chart to say exactly when. And we let them get in basically on this candle on a break and fail of the 8. So that was the candle they got in. That what happened. It just kind of sat here all day. So, but that would have been the proper entry to get in. Now you could have never hit your stop. We stopped ourselves out, but FOMO would be, okay, they're in. Oh my God, I got to get into something. And you get in right here. And then you're stuck with this. No, you got to still trade by the rules. A test of the 8 and failure. Did we know it was going to do this afterwards? No, because we would have all been out then. But that's just an example. You didn't want to get into, what was another, MU, right? People were asking me about MU. Well, if we all got in on a break over here, right, pretty early, and you're asking us over here, you can't go in the trade. And why was UPS okay, but MU wasn't at this time? Because there was more room down. MU really didn't have, it could break it, but it already made a good part of its move, where UPS really still had another test of that 200 day. So that's FOMO. Okay, so sometimes you might just be late, might not be time to trade. I know a few of you did good in the morning, then you left the room. There's nothing wrong with that. There is no reason you have to sit here. If you want to learn, that's fine. But if you're going to sit here and watch people trade, and even if it's chop, you don't want to chop out after you met your daily goal or you're happy with the way you performed, you know, stay on a high note. You could watch and learn, but if you're going to get sucked into other alerts and other people's ideas or my extra alerts, don't stay in the room. You just got to get out until you can control that, because then you will get FOMO, which will lead to over trading, and you'll probably chop out some of your profits. So that is some things you have to realize. Those are the biggest things. Other thing, I don't mean this to be, it's kind of a repetitive slide. 90% of traders fail. Biggest reason is they can't handle their own psychology, their own brain. It's not that they can't read charts. It's not that they can't do proper sizing, which might be the second half of today's class if we have time. We would go over sizing. It's because they can't control their emotions. It is emotional trading, right? You're sitting here, we're staring at charts all day. It's right. We're looking at just an example, you know, we're watching this go down. It's going, not saying it's like a crap table, we're gambling, but you know, we're all here in the room together, regardless any trading room you're in, or if you're just sitting here alone. And you also, your money is involved. So that also brings emotion, right? Some of you are doing this as extra income. Some of you are doing this to learn as an account builder. Some of you are doing this for your full-time living. So it does get emotional with your money. It's not like a regular 9-to-5 job where, you know, if you come to work and do your job properly, you automatically get paid. It's one of the only professions where you could do everything correct and still walk away with a negative day. So you have to mentally be able to accept that and realize that and think about that every day before you start. I could have a red day. I could do everything correct and I could still lose money today. And it doesn't mean I'm a bad, it could actually mean you're a great trader, right? You're doing everything correct. You've followed every rule, but it's the market. You could still end up in a red day, and you have to be able to accept that is the key. Okay. Some other things, this gets into discipline and psychology. Got over trading, got to use stops. I think today was a good example for stops for trade management, right? How we kept ratcheting up the stops as we were making money. Instead of just setting stops for a loss, we ratchet them up. And it was all based off of technical levels, but I think today was a good example why you should use stops on two reasons. You saw a profitable way to make stops. They're not always just to have a downside level. Look, we stopped out of UPS at not even close to what our stop was. But that's ways you're going to skew your risk reward, guys, is you've got to use the stops. We went over FOMO, discipline. You got to be able to try to put them all together, all the rules, and be disciplined. We don't have to go over plan, greed. That's kind of my saying, tick for a dick for a tick, sorry. Sorry about that. Just because there's a line on the chart, guys, we happen to get to it here, but if you get close, you should be scaling out. You should know a level's coming. So you don't wait for that exact touch. Yes, today it hit most of our levels to the T, right? But you should be scaling out. You should at least be prepared. One thing that a lot of traders don't do is the early entering of exits, like I tell you guys to do. It's because I know on an option, you'll get the pull if it works. Sometimes you have to adjust it. We don't get down there, right? We have to adjust it and just take, maybe we give up, instead of making 90% if we didn't have that order in, maybe we only make 80%. But you got to be prepared. Don't go for maximum gain. Don't go for greed. Don't think you know what's going to happen next, basically, right? I mean, back 3 years ago, was it 3 years ago? Yeah, 2018, about 2 years ago. 30%, 35% was the daily goal per trade. It wasn't these crazy 100%ers. That was it. And it was actually easier back then, right? You got 35%, you're using different kind of options, and that's it. So 100%, yeah, it's our target just for management, but you don't have to be 100%. That's where greed kicks in. So we said it there, but we still have to use logic. Because I know some people are still holding trades after I say, like, get out of trades. And I'm just using this example. You got to be able to take a loss. I don't have this on this one. This might be on the next one, but you got to be able to take a loss. Predetermined outcome. That's psychology, guys. Well, if you get, don't be a tick for a dick for a tick on your, you got it backwards. Don't be a dick for a tick on your forehead, you won't see it. So I would put it on a post-it note. Just joking. Okay. Another thing people have, predetermined outcome, right? We do set up trades. We do set up plans. That can't be ironed into your brain. Just because we set up a plan, right? It could fail, regardless if it's on a daily chart, any chart you're looking at. Okay, today we kind of had an idea everything was going to open, extend, and come down. It happened to work, but if it didn't work, you have to accept it was wrong, and you're allowed to be wrong in this. You don't have to be right. You just have to be able to accept you're wrong. And two, you got to be able to get out of it. It's not sit here and wait for yourself to be right. Okay, we're using the knowledge we have based off the charts, but you can't have this predetermined outcome that it's got to work this way. And that gets into the next one. Admit you're wrong. There's nothing wrong with being wrong at all, right? We're using charts and technicals to our advantage, but we could still be wrong. So you see how calm I am when we're wrong. I have my stops in place. I have my risk reward under control. Is it fun to be wrong? No, but it doesn't affect me. It's just from being wrong, doing this for years. And until you realize that, you'll feel a lot better trading when you realize it's okay to be wrong. And just you have your risk under control, you have your sizing right, and you're not staring at your P&L. And it was just a wrong trade, and you go on to the next trade, move on next. If you're going to stand there or sit there and stare at it and go crazy, why was I wrong? Why was I wrong? You should, number one, you should stop trading for the day and just, you got to get over it. And you can't trade like that because we're all going to be wrong, right? We know the technicals, we're putting probability on our side, but it's the markets. And right now you guys are trading in the hardest market probably I've ever seen. I mean, this is ridiculous. And you could see, even looking on Twitter, guys, look at the guys that have been trading for years that post stuff. I mean, I don't post that much on Twitter, but some of these guys that post every day, the more intelligent guys, even, they tell everybody it's the hardest, most illogical market I've ever seen. So don't beat yourself up over that, guys. If you can make it through this, I guarantee you'll make it through when it's a regular trending market that makes sense. And what happens when you don't do most of this is you can't see what's right in front of you, right? Using up so much of your mental power for other things, greed, discipline. You're trying to get what you decided the stock's going to go, not beating yourself up because you were wrong. Just admit it. You can't see what's right in front of you. And the easiest trick for that was why we did the lesson before this was the stacked DMAs and just following the 5 and 8. Oh, let me take off that. Oh God, now this is going to keep coming up. Just following the 5-8, right? You could see what's right in front of you. If you guys simply remember that rule, and like I said, spoke to a few of you, your ultimate stop could be a 21, the 21 EMA, or it could be a reversal on the 5-8, or for somebody that's more conservative, some of you want to add in the 13 or use the 13, you can use that too. But this makes it plain and simple. It's right in front of you, right? You see there's no reason to get out of this trade till possibly here. And still we weren't even in this trade. I'm just using this as an example, but every stock was basically the same today, right? No reason to get out. Here's another one to look at, right? So if every chart looked like this today, and then we had this on a swing, longer dated, well, this chart kind of took its bottom and just bounced and held and was trying to fight the trend. So there's no reason to get out of a strong chart just because everything else is down. Doesn't mean the world's falling apart. Doesn't mean people are going to stop ordering dog food online. Strong chart's a strong chart. So the daily here was perfectly fine. What do we want? We just wanted to hold up above 48.50 yesterday, right? Yesterday, that was our key. If it was good, what was our key that we might stop out of if it didn't hold up 48.50? Well, not only did it hold up 48.50 today, it closed up 83 cents in a market that was down, I don't know where it closed, but closed up 1.7% in a market that was down 2.5%. So that's extremely strong relative strength. So you got to be able to also mentally see what's right in front of you and stick with your winners. Okay, next. And tell me any questions, you guys can anytime come in. Don't think we have to do why to become a trader. Discipline. Okay, trading's emotional. Got a question possibly coming in, guys. So it's not about being right or wrong, right? This gets into the psychology. Who cares if you're right and wrong? Stick with the plan. Stick with your risk reward profile. Think like a machine. You think any of these algos are trading against, they're trading with? Care if they're wrong? Get emotional over anything? No, they're machines, right? They have no emotion. Unless this is the Terminator days, but I don't even think the Terminator had emotion. So you got to think like a machine. Just go back to mathematics. I'll go over that after, Taylor, just because it's not kind of related to the class. Take emotion out of it, right? It's hard. It's the hardest thing to do. This will be the hardest thing for you guys to do. It could take a year. It could take 2 years to finally become like I am, where you could just sit here and watch a chart and let it play out and not rush anything. But you got to take the emotion out of it. The main reason you're going to have emotion is A, you're trading too much. B, you're not sizing right. Or C, you don't really have your risk reward plan down. Because if you have these down, you could really take emotion out of it because it's just mathematics then, right? It's a plan. It's a business plan like anything else. And you're looking at the business plan. And do you have to make adjustments to the business plan? Maybe you need a 1 to 5 risk reward. But as long as you're following these, it happened. Today was a down day. Today was a better up day. Just because today was a better up day doesn't mean we double or triple our size tomorrow. We stick to an open mind and stick to our plan. And like I said, your greatest enemy in this one is your mind. So now here's 2 charts I found online. Okay. It kind of goes over your emotional roller coaster through a trade. And you probably all felt this. If you didn't, well, then you got the machine part down. Every time we get into a trade, is every single person excited? Optimistic, right? It's going to work. We're not getting into a trade saying, okay, let's buy this and we're going to lose money right away. No, we obviously have optimism. Starts working, excitement, right? We're making money, P&L's getting better. Next, thrill. Obviously, we're short term, so it's not an investment. Then you see the 100%, you got your euphoria, right? That's why we're immediately taking some off there. It's not always going to be 100%. It could come at any time, but you've reached our first goal, let's call it euphoria. So you should be half out of the trade. I'm just using this as an example, half out or decently scaled out, have some profits. So when you get to the next point and it starts going against you, we don't want to hit anxiety. Oh crap, should I have gotten out here, right? This is basically the chart of your emotions, okay? So your problem is, if you get here and you start anxiety, you're not taking out off enough here, okay? You're also probably staring at your P&L. So anxiety, now you're getting nervous. Oops, I didn't want to do that. Now I'm really going to start. There we go. Anxiety. Okay, you lost 10 cents. You're still up 90%, let's just say, but you lost 10 cents. You're getting nervous. I got to get back to 100%. Well, that's not, you got to watch the chart, see what to do. Now it's at 80. Now you're down 20 cents, okay? You're denying it. Now it's going to move back. It's going to move back. So you're denying it. You think it's going to move back. You know you're wrong that you didn't get out a portion here and here, but you're just waiting to catch the 100% that everyone else got. Just using that example. Fear, it keeps going down. All right, guys? You didn't get out. We gave the alert, get out, cut the losses or something. You didn't get out. You're crapping in your pants. Well, not literally, but, oh my God, it's going to go to 0. Desperation. You're praying. Now you're at the pray mode, right, guys? We're praying, please, please, stock market gods, bring it back to where it was. Bring it back to my entry. Anything like that. And then finally, when you sell it, it's this mode. Panic, capitulation, right? So you're panicking, probably at the bottom of a chart when it's about to make a reversal to start getting back, right? And that's when the good traders are buying it, right? So you're in your depression mode. I totally screwed that trade up. I suck. I suck. And people are starting to buy it. And then the next stage is, if you're not out of it, you're hoping, and you got lucky and you got back here. Kind of like if you stayed and win. You've actually probably went through all of these. You got lucky. You got your glimmer of hope back, right, today? Relief. You're back to even. And we're back to the beginning, optimism. So it kind of played out, right? If you held win through all that, if you couldn't control your emotions, you went through every single one of these. So it's kind of the perfect example. Now, did it work out for you? Yes. But a lot of times it ends, most of the times, guys, it ends here. Panic to capitulation. You're normally out there and you're normally lost 100% on your option, or it just goes to zero. You don't, 10% of the time you'll get lucky and get to go back to the hope mode. Hope mode was break even, right? Break even on when was hope mode. There we go. We got a confirmation from Taylor. Taylor, did you have most of these? Does this look familiar? Well, if you missed the exit, you might have missed some of these. You might have went right into panic mode. Okay, yeah, Taylor says yes. So it's common, guys. This chart is up there because it's the way people feel, right? It's your emotions. So if anyone wants a copy, you could have this. You could even put this somewhere on your wall, okay? Put it on a wall near your trading computer. And when you think, should I get out? Should I stay in? Look and see where you are on this chart, right? Are you anxious? Are you denying that you missed the exit? Are you afraid? Where are you? And you just look at it like that. Yep. Okay. Second one for the emotional roller coaster. So it's just more reasons. This is just you what this is, guys, is you rationalizing this, okay? So this is how you felt. This is how you're rationalizing it. Market's going way down. Well, the chart doesn't exactly line up. So the start of optimism would be here, buy, right? We bought. Well, I don't know about stocks can only go up, but stocks only going up. This time's different. Holding it. It's too soon to sell, right? You got picture an up market. You think it's going up higher. And it's the opposite for a down market. Hold, even though you should have been out here, which on this chart is your euphoria, your profit potential. You think it's going higher, so you'll hold it. Now you're here, it's too soon to sell. Anxiety, you're anxious. Still too soon to sell. You're denying it. Basically, too soon to sell. You're denying it's too soon to sell. Now you're saying it's okay to sell. Why is it okay to sell? Because you already feel firm desperate. See how that lines up? Now you sell. You panicked. That's it. 90% of you are out. Now you think it's going way down. And what happens? You're back to the beginning of the trend. So this is how you're rationalizing it in your head. I could send you that too if you guys want. Okay, something simple just to get you guys about the risk reward and the 3-to-1. I don't know if you've seen this before. You only have to be right 50% of the time. If you're risking $50 a trade, right? And you have your 3-to-1 risk reward. Now, again, this is perfect that you lose your full amount on one trade and then make the 3-to-1 on the second trade. You could double your account size. Now, you're not always going to be risking 10% of your account because that would be crazy. But it's just showing a mathematical equation of how it works. If you're risking 2%, if whatever you're risking, you will be profitable. So it's just showing you basically if you're right 50% of the time, you could still be profitable. It's all about risk reward. That's it. That's the whole game. Now, obviously, a larger account will not be risking that. A smaller account, you could get a little more aggressive to grow your account. You can put that into any spreadsheet. You could also change it. I didn't change it, but if you write 60% of the time, and maybe we're not risking the whole amount, right? I mean, based off of some of the losses and overnight gaps, we probably lose some. We lose more than we want to lose, and some of them we cut off early, so we don't lose as much. So it probably equals out. And of course, some you get more than your 3-to-1 risk reward, and some you get less. But if you can manage this overall for a month or for your trading periods, you will be fine trading. Okay, all right, back to, so discipline. Just gets into the discipline, guys. I know we looked at this already, but it gets back to it, all right? You got to be disciplined with your stops, with your risk reward plan, taking profits, letting winners ride. How many of you have a problem letting winners ride? And another reason, we'll just bring up this chart again. That's another thing, guys. If you're staring at your P&L, yep. Well, that's what this is for, guys. This is what your 58 is for. You know, I'm always here with price levels for you guys. It should help you let your winners ride. The reason you get scared letting winners ride is probably because you don't have your stop losses right on your losers, and you're probably letting your losses go too far, and you're holding on to things that you shouldn't be, and you're staring at your P&L, and that stupid red loss in there is saying, okay, as soon as the whole account's even, I'm just going to get out of everything, even though this has your full risk reward still available. So you can't think like that. I'm just taking a sinus medicine as we do this. Okay, so that's a major problem. If a red trade is killing your mindset and not letting your winners ride, guess what? Sell it. Just cut it off. There's no reason you can't get out of a trade. If you wake up and see a lot of red and it's bothering you, just sell it, even if it's 5 cents recoup on your money. Get it off your P&L so you're not looking anymore and you got a fresh start. If you've had a bad week or a bad few days, you know what? Every once in a while, and these are just basic things that I'm teaching you guys. There's no slide on this. You can clean your books. What do I mean by clean your books? Get rid of everything in your account and start fresh. Start with cash, right? There's no rule that says you have to hold things. If it's mentally affecting you, I'd rather you clean it, wipe off your chart, wipe it off your portfolio and start fresh and start with cash on that next Monday. So that's a big thing. And that could help a lot of you. And it'll also help you let your winners ride. So there's no harm in doing that. Trust me. I've done it before. I've taken everything off once and said, you know what? Let's just get a fresh start. Let's just start Monday fresh, or let's start July 1st fresh. You could always get back into a trade, right? Commissions are basically nothing now. So a good book to read, guys, just to show you, is Trading in the Zone. Okay, cheap book. It goes over all this in much more detail. I've read the book. Probably have to read it twice. I've read it certain chapters twice. You'll find which chapters are really affecting you, and you'll want to read those more. The chapters that don't affect you, you don't have to read twice. But that's definitely a very good book to read. And I'm sure a bunch of you could find it online somewhere with a PDF. Okay. Next. So what's the main reason, and this is where it gets to Q&A, give me some of your main problems, guys. Psychologically. Because I know after speaking to most of you, and after the class, you could all use the 580 EMA. I know we know price targets. So what's some of your main psychological difficulties? Are you taking too many trades? And you guys ask questions now. Like, are you taking too many trades that you're looking at 10 charts? Okay, and you can't think clearly just on what's right in front of you. Because that's it. You got to figure out what your mental bandwidth is and trade that many trades. Some of you probably total account risk. Okay. Total account risk is definitely a good one. So the size of a trade is different than how much you're risking. Could you risk 10% in a day? Yeah, you can risk 10% of your account a day. That's risk. Okay, it doesn't mean how much of your account's in the market. As long as you have your stops, right? You have to have the stops in. 5-10% of your account, depending on the size. I mean, obviously smaller accounts are going to have that in it. You're going to be risking 10% of your account sometimes. It's not optimal when you have a large account, but you need to do that. But as long as you have your risk reward under control, you should be okay with it. I recommend also, I mean, every trader tells you, don't stare at your P&L. Don't look at it. I mean, we use the 100% mark, but that's just a mark. It's not anything definite. What we're looking at more is the charts. And if it can get there, why use a 100% mark if we're only going to get 80, right? We're still using the 3-to-1 risk reward, which is the key to every trade. If it was slow, I could show you when we enter a trade exactly what we're looking for, why it's 3-to-1, why we're using this stop, and why we're looking for this exit. Sitting on your hands, exactly. That's a big one, guys. Yep, staring at the P&L is anxiety, 100%. You're watching it move. Oh, I was up X amount, then I'm down 5%. Oh, I wish I took everything off and I was up X amount. Don't stare at it, just look at the charts. You won't be able to see the simple things if you're staring at your P&L, right? Even today, premium burn. Yeah, premium burn, but you got to also be able to recognize when premium's holding up. So if the market's going up and you see, let's just use UPS for example. At one point, the market was shooting up and UPS, it moved like 2 cents and we were in puts. There's no reason to stress out about that. Just look at the charts. Sitting on your hands is very important. So you got to be able to sit on your hands. You guys saw it today, right? Let's go to the SPY. What did we do? You guys know our trades. Visa today was a big winner. The people that held Win, big winner. MU, good winner. What else was there? Some of you made money off of Disney. It feels like this morning was like, this day was so busy. We had different periods of the day, right? It was so exciting in the morning, which was a pretty big morning. I mean, we really had straight directional play with no downtime until almost noon. Then we got into the chop. So this is where you got to just know, sit on your hands, do nothing. We entered one trade for some of the trades that just came into the room because it gave us a signal that we could have entered the trade. Other than that, we really did nothing at the end of the day. We put on a SPY lotto for the what if. And again, lottos, that gets into another section. Lottos, take very small. It should not affect you if it goes to 0. You should actually be in the mindset a lotto will go to 0. The reason you take lottos is because they have a great upside with minimal risk. It's a lotto because literally you should be playing, like I said, 10% of your normal size. Very low dollar figure. And if 10 contracts is 5% of your normal size, that's fine too. The whole idea of the lotto is it has the potential to do it. It doesn't have the probability, right? We try to pick ones that have the probability. Okay, hold on. I'm just going through the questions. How do you ensure you're only taking the right trades? Well, it's based off your plan and your trading plan. You could never be sure you're always taking the right trades. I mean, we try to go off of a plan and a system, right? We use stacked DMAs. We use all those tools we went over in the other videos to say it's the right trade based off of my plan. Are they all going to be perfect and work out? Absolutely not. But, using the tools we've developed and the technicals we're using, do they line up? Was it a clean entry, right? Or 5 out of the 6 EMAs stacked for a long? Is it a long? So, okay, check that box, yes. Does it meet my risk reward parameters? Does it have the room to go? I'm just using up as an example. I could risk $1 to make 3. Yes, it meets my risk reward. It has the room. What else? What's the market doing? What's the ETF doing that it falls under? Obviously, SPY is not an ETF, but just for an example, if you're trading healthcare, you want to see what the XLV is doing. So as long as you've done that, you're taking the right trades. If you see a chart, like who wanted to go, somebody wanted to go long DocU. One of the guys that was in for free, on the free trial today. Not trial, just the free Wednesday. Okay, there was no reason to go long DocU yet, right? Told them it's probably going to 62. So how do you know if it's the wrong trade? Well, It's writing the 5 EMA down, 5-8 EMA down, not even testing the 21, maybe once. It's had a big ride, Docu. Okay. It was extended. Yeah, it filled the extension, but I think it has more room to the 8. So it's the wrong trade forcing to go long here. Can it bounce up tomorrow and open up 172? Of course it can. But what's the charts telling you? If you follow the charts, you'll be right 80 to 90% of the time. At least in the decision. Doesn't mean the trade will work out, but you'll be right. But there was nothing here that says now's the time I got to get long. If anything, it's got 162 on it, and if it loses that, 150, 258. Just an example. It wasn't one of you guys that was looking to do it. Okay. How do you handle drawdowns like 50 to 60% win rate? Well, first thing, okay, that's a great question. How do you handle drawdowns with a 50 to 60% win rate? You can't have 5 or 8 losers in a row. You reduce size or take a break. Okay, first thing. Excellent question. Let me pull this back up. Number one, if you're going on a bad losing streak, just because of mental or anything, take a break, okay? Just stop. You're allowed to take a day off. Take a mental refreshing day. Don't look at the market. Don't care about the market. It's my first, because if you don't have a clear head, all you remember is your last 3 trades at most, okay? It's a proven fact, and it comes from this book. It comes from Trading in the Zone. Your memory at most, or at least your euphoric part of your memory, that'll really control your emotions is your last 2 or 3 trades. It's not 10 trades ago. It's what happened the last trade. So common problems that happen, if your last 2 or 3 trades were good and you made out good, common mistakes new traders make, they go bigger size on their 3rd trade. And guess what happens? On that bigger size, they take on too much risk. And then guess what happens? They get stopped out and they gave back everything they made on the good trades and more. So that's one part. Definitely take note of that, guys, because you remember your last 2 or 3 trades. It also works in the opposite direction. If your last 2 or 3 trades were bad trades, right? You'll cut your winner too soon. So follow the graphs, chart, see what's right in front of you, and just remember that. You can put a stickum right on your desk. And I tell you, when I say put a stickum, I literally used to have Post-its all over my screens. All you remember is your last 2 or 3 trades. You can put that and remember what that means. You don't have to write out everything I just said, and if it's affecting you, and if you realize you're going through that pattern, just stop trading for a day. Stop. If it's a Thursday, stop trading for the rest of the week. Take the weekend off. If you get 5 or 8 losers in a row, okay. Well, obviously this is built for a 50% win rate, so 5 or 8 losers in a row. You'd want to rethink what you're doing first. You got to look at your plan. What's going wrong? Is it the market just being the crap out of you and take a break? I mean, you could have a choppy market. That could definitely happen. But you got to identify where the market is. Now, if there's small losses, you can't have 8 losers in a row that hit your maximum risk, right? You will be down. You'll have a tough time coming out of that. So let's just say you have four maximum risk losers. Maybe take a day off from trading. Take a day off, reduce size. That's one of the best ones, okay? First is take a break. Second, reduce size. And literally, if you're option traders, use 1 contract. Use 2 contracts, depending on, for the bigger accounts, if you get into that zone, use 2 contracts, just use it as a confidence builder, right? Okay, I know what I'm doing again. I guarantee you, if you're somebody that normally has, and I know some of you have big sizes going on, if you're going into a bad streak, and I'm just going to go to the XLI again, just because it's an easy chart. I don't care if you're one of my traders that's trading over 100 contracts, or if you're one of my traders that's trading 50 or 30 contracts. If you're going into a bad streak and you're not playing by discipline and it's screwing up the way you're looking at charts, literally trade 2 contracts. I guarantee with 2 contracts, you'll be sitting back totally relaxed and just reading the charts and letting them do the work. And you'll probably trade it as close to perfect as you can. If you have a smaller account, we could just work on it. You know, we'll have to trade one contract and set simple goals. Lessen the goals, start with making just small gains. It's really just building back your confidence. If your confidence is gone and your mind's taking over and you can't read the simplest charts, you got to stop, right? If you look back on a trade, and I was speaking to somebody yesterday, I forgot who, but he looked at the chart afterwards and he realized there was no reason he should have ever been in the trade. It was AMD. Yes, I think it was AMD yesterday. Yeah. I mean, this is today. Let's go to yesterday. I keep forgetting what today is. There. Okay. We were DMing, and he looked, and he kept flipping from puts to calls. And what was your range? 60 cents. How could you make any money? Why could you even trade this? He was revenge trading AMD. That's another thing, guys. Don't revenge trade. You lose money on a name, just go to the next name. There's freaking 5,000 names out there, probably more, right? Does anyone see any trade in this? And he literally traded this 3 times. Little small paper cuts, but small paper cuts added up to more than loss if you just took your first loss. You can't trade 60 cents. Then you're watching the premium. Every pull, he was getting very emotional. So you have to be able to. So what wasn't he able to identify? He was revenge trading this, and he wasn't able to just identify I mean, guys, you guys were in the room. I called that one trade yesterday. It was a swing because it was just chop. I guided you guys in some of your trades, but why can't I get this to size right for us? I didn't give any alerts yesterday, and I guarantee there's not a single room out there that did that, other than me probably. I just gave chewy swing because I saw chop. I didn't have any clean trades I liked. You know, I don't trade the Teslas and the more volatile names, which were the kind of names in this market where you can get 3-4 points directional, but your whole day was 90 cents, right? Yeah, yesterday sucked. You're going to have sucky days, guys. Listen, if you're in a chop market, we can identify it, and there's different ways to trade a chop market using iron condors and other strategies. There are perfect strategies for a chop market. We're not in a chop market. Yesterday was just a chop day. You're not going to go into an iron condor for one day because the market's chopping one day, right? We had a gap, and then we did nothing basically. But you guys can't revenge trade. You can't force a trade to see a trade out of this. And I would never go into a name 3 times. Just a rule of thumb. I sometimes refuse to go into a name 2 times. You know what? If I get this one wrong, just move on to the next name. You can't buy a put here because of the 8 and keep waiting and waiting and waiting. And then you suddenly go, okay, now I'm going to buy a call. You buy a call here, you hold it, you think it's going to 59. And we knew the level was 55.06 the whole day. Okay. Buy a call, it gets below the 56. Now over here, you're selling your call, taking another loss. You're going into, well, if you went into a put, you might have made a little something, or it just premium decayed and you burnt and you didn't stay for the final pull, right? Because you didn't really have any range. So you got to identify that when it's just, there's nothing to do, sit on your hands. And it's definitely probably the hardest part of trading. And I'm serious, if you guys have a problem sit on your hands, download freaking game on your phone, an app that you like playing, or have a TV near you and put on a show, put on something on demand, watch it in the background, listen to me, and look at the charts every once in a while. You don't have to stare at this computer all day. So that's another thing, identifying when it's time not to trade, very important. Any other questions? MB, did I answer your question? First, MB, did I answer your question? Did I answer your question? Okay. Any other questions on psychology? Any other issues we're having? I'm trying to think of other ones. I know it was letting winners ride was one of the biggest one. Stop losses, I know some of you aren't using them for a fact. If you miss an alert, it's okay, guys. It's not the end of the world, but you should always have a stop loss in there. Trying over trading. definitely one we got to work on. I know some people solved it. And staring at your P&L. So those are the three biggest. And I just thought it was a good time to talk about this because yesterday was kind of a chop day where there was nothing to do and everyone was sitting there eager to take a trade, and most people just chopped around. Today was the opposite. Today was a directional day, right? Yeah. Today made it easy. So I know, does everyone feel better today than they did yesterday? And for those that are watching the recording, it's just people typing. And it's yeses. Okay. So part of what you have to accept is there's going to be days we just sit on our hands, guys. You don't have to trade. And also, if you're doing this, regardless if you're doing this as your main source of income, if you're doing it on the side as your secondary income, if you're doing it to learn, you don't have to trade every day. You don't have to hit daily goals. It's not that type of job, profession. If anything, I say set weekly goals, set monthly targets. Yeah, Hank took 3 days off. Exactly. Well, you didn't miss anything yesterday, Hank. And you guys can always DM, always DM me, ask me. Constantly going over charts. A lot of guys in the room have great ideas, so there's no problem following guys. Now, don't overtrade, right? You can't follow everyone's trade in the room. Just because one guy's in Beyond, one guy's in Apple, one guy's in MU, you can always take a few of your own. I got no problem with that. Also, I usually looking at, which is a lot, 20 charts, setting those up so I can't find everything. So you guys are part of my scanner too. But I still recommend 2 to 3 trades a day, regardless of what everyone else is doing. You could be done with your 2 or 3 trades by 11 o'clock. There's nothing wrong with that. Like I said, you don't have to sit here. Your most important thing is protecting your profits and your capital. So if you made your daily, not daily goal, but if you've had a good hit in the morning, good run, leave. Look, technically we could have all left. Well, that's XLI, but let's use Visa, right? The only one who didn't get Visa was me because E-Trade was down. Everyone else banked on it. It was the most technical trade. I mean, it was literally, what was I off by? Got right to my level. I was off by, it went a little lower, off to the good side, right? It was off by 21 cents from 96, 97 down almost $6, more than $6. And I was off by 21 cents. You know what? Anyone that caught this full run, you could have been done for the day. Go do what you want. What time is it? It's noon. It's noon by me in Eastern time zone. Go have lunch. Do what you want. Go watch TV the rest of the day. Anything could be better than sitting through this, right? Were you going to retrade it here and catch it here? No. The little piece you guys had on left, A, we either rolled it, or B, you were waiting for the big flush. So even if you were sitting here, there's still no reason to sit here. Why? A, you had your stop in, and B, if it's going to flush, it's going to flush. You staring at the screen is not going to make it flush down to the 87.47 level, right? So you made your money. You're done for the day. You could even still have a trade on. Put your stop loss in. And if you get that flush, guess what? Go. It flushed. Check in at 330, right? Maybe do a bracket order for that extra part. You could check in on DMs, but don't sit in your chair staring at the screen. And yes, I wouldn't say it's falling knife. That was more just a steady pattern down, right? It just rode the 5-8 down. Falling knife would have been like one huge candle, like let's say a $3 candle, and then going. And we never got extended. Like we got a little extended here. So that was just a down day. Look, we've had how many up days? Look at yesterday, right? What did it do yesterday? It rode the 58 up, the 5-8 line up. So it's no different. Down happens quicker, yes, right? Because why? Everyone's panicking. Why does down happen quicker than up? Up, you don't panic when it's going up, right? If you're short, you're panicking, but Let's be honest, most of the market's normally long. So you panic when it's going down. Yeah. That's why it happens faster, right? All those longs are panicking. So what happens if selling pressure's on? We're in puts. The bears are putting the selling pressure on and you're long. Well, the last person to get out is usually the bottom, right? That's why if you go back to, we'll look on a bigger time frame, guys. We'll actually maximize. We'll go to the SPX. Okay. Use that chart. And I'll just show you. And this actually shows you a good example, if I can find it, of kind of that emotional roller coaster, right? Look at March during COVID. Okay, I know I got a lot of lines here. And we need to wait for this thing to load with all these. Come on, there we go. Okay, so let's think back to that emotional roller coaster. Oh, it's too big now. Okay, you're short, you're short, you're short, you're short. We got extended, right? Capitulation. Everyone threw in the towel. What happens? The sellers stop, shorts start covering. It causes a short squeeze to the upside. Market was still terrible, right? You got another day. Some of them took profits. Some of the people that took profits up here said, I'm selling. I still don't like this market. Up, then the same thing. That's why you get these weird up days in a falling knife bear market. And look at these ripbacks, right? That's emotion, right? You're short. Picture somebody with equity. If you're short here and you see this candle, you have to have some good mental power to say, okay, the market's got a lot lower to go, right? Imagine sitting through all this. Could you guys mentally right now sit through this with a short equity? Because some guys did. No, for a fact. They had targets. What's it doing? Did anything here say? It's writing the 5 down on the daily. It's doing exactly what it should do. It's as linear as today. And this is a daily S&P, guys. But I can guarantee you now, for us that trade overnight and swing, yes, we could trade this. But I guarantee you, the bigger guys that were short this market just held short the whole time. Could they have made extra money trying to time this? You can't time this exactly, right? If they had a target that if we break X level, we're going to get to level Y or Z, they would play that out. And it rode the 5 down perfectly for them. Nothing would have told them in a swing or in a, let's just say a trade setup, if we break 2880, I think it's going to go to, let's just say 2390. Let's say they use Fibonacci or whatever they use to come up with that number, right? They weren't trading this mess. They were holding their position and shorting it. So that's why they were able to take out the psychological part. Did they like this candle? I'm sure not, but you know what? Take a step back, relax, breathe. What's it doing? 5 EMA. No biggie. Next day, they see it. After you see it 3 or 4 times, you realize. And I'm sure they were scaling out. Oh yeah, 100%. I've had a losing month. This year, no. This year I had break even. I mean, this was a different, guys, this year's been crazy with the volatility. But I'm never all in. I'm always, at least always, 50% cash, guys. What was my best month? I'd have to look at my P&L. Probably catching part of this in March. It was probably my best month. Why? You guys see how quickly puts work, right? Puts work faster. Where was my worst month? Or break even? No, I did have a losing month. Probably in here. I got chopped around here. Why? Because I still thought we were going lower. Or at least not going here, guys. Still had up days, but for a month, you could have a losing month. Again, you don't kill yourself because this month was a lot bigger win than my 3-to-1 normal win and a lot higher than my target. This month, I lost a little. So you average the two together, you're fine. But even me, right? I've been doing this for years. You could still get caught up in the media. The best thing that happened to me is doing this room, talking to you guys, because now I just look at the charts most of the time. I don't even listen to CNBC. I look back just to see what they're headlining. But when I used to just trade and work for some other rooms, help out teaching and that kind of stuff, and have CNBC on most of the time and listen to them, it actually affects your trading, 100%. But yeah, this was, I know a lot of people that got chopped out over here. Did any of you think? That's why finally you just say, you know what? You realize you have that losing month, okay? You come in next month and say, okay, let's just get back to reading the chart, right? You could still get sucked in. Big profits on the downside, right? Better than month. Was I still disciplined? Yes. Could still have a losing month because held on to trades a little too long, mainly swings and overnights with these gap ups. But gap ups, you know, you can't put the stop in. If you're overnighting something, you guys see, if you're overnighting something that gaps up and you're short, well, sometimes you're way past your stop. So that was my problem in this range. It was just too many gaps. And gaps aren't easy to trade. So even for all you guys that have traded through this and this is a hard market to trade, guys. Okay? This is literally, you couldn't overnight something, right? What'd you get? 2 days, then you killed. A day, killed. It was total chop. And you're listening to the news cycle with the coronavirus, the world's ending, right? Oh no, we got to go back down. Everyone's calling 2000 or whatever numbers they were calling retracement. Well, guess what happened? The total opposite, right? We just kept going up. And just looking at this chart, anytime you think you know what's going on, just look at this chart, guys. It's the easiest thing to do. And we look at it every morning just because we're mapping it, but, you know, zoom out. Say, okay, remember that period when I thought the market and the whole world was going to hell and we're going into recession? Not saying any of this might not still happen, but you know what? Just trade the chart. Would I have thought in a million years we'd be here? No, not at all. So now we're starting a new cycle and we got to see what's going on with the market. So we'll just follow the charts. Any other questions? Well, you know, we're going to keep going. We can keep going with questions. I'm just going to shut the recording off now for everyone that's going to watch this, just so. Hold on. Oh. Wait a sec. Sorry about that, guys. I screwed up something. And I'm sorry for everyone that has to listen to me saying I screwed up something. I just going to stop the